Namaskar. Welcome to the webinar hosted by Hindu Business Line on India's real estate sector. This sector is in a different kind of time zone and the mood, you can say. Time zone means that every city has its own way of explaining the real estate sector. When we talk about mood, every city has its own way of explaining the real estate sector. To understand what is the trend, what is the outlook for this fiscal, for the next year, for the coming year, what kind of price trend we are going to see, all these things we are going to discuss in this webinar, and we all are welcome. All the audience who have joined us, they are also encouraged to pose their question. And our expert today are Mr. Vimlendra Singh. He is a chief business officer with Mahindra Lifestyle. He's dealing with the residential. Then we have Gulam Jia. He is international partner and senior executive director with Knight Frank. And we have Mr. Prashant Thakur, who is executive director and head research and advisory ANAROC. Let me start with you, Gulam. Since there was a report also on the first 6 months of the this calendar year from your agency, so how do you see the sector? How do you see the trends?
Thank you so much, Ashir, for organizing this platform and allowing me to be with these two stalwarts of the industry. I'm sure it's going to be a fun 1 hour. Starting with your question on what do we really see from where we see it from our vantage point, what kind of market perspective do we have? Well, to just set a little backdrop, for last couple of quarters, I would say, there have been murmurs, there have been, discussions, albeit in private, that real estate sector is already on a downslide. There have been discussions that how residential sales have been drying up, how office transactions, due to various global factors, including Middle East war, and while Russia-Ukraine war has almost become like a new normal, but even that has an impact on India, and of course the AI, machine learning, and so on. So there have been discussions that even office sector is going through a serious turmoil. However, when we look at the first 6 months of this calendar year, that's what the report that you referred to, which we released a couple of days back for Jan to June 30th, the numbers are not supporting that negative argument yet. And as you said, while there are, since you're talking about housing market, while there are cities which are behaving differently, and that's something which is kind of a new trend, that India is not looking at a India cycle. India is looking at a Mumbai cycle, a Delhi cycle, Bangalore cycle, and so on and so forth. And that's evident when we look at the numbers. While cities like Bangalore are going to uprise, in fact, on the other side, a growth. On the other side, something like a Delhi, a city like a Delhi, is on a considerable downturn. Mumbai is doing fairly well. Pune, which had a bad quarter for last 2 or 3 quarters, has suddenly at least come equal to a last half yearly. So the numbers on residential transactions net, if I talk about the top 8 cities, again, the first 6 months of this year are almost the same as last 6 months, actually a little better, a tad better, with 1% growth on what we observed were the transactions in the first 6 months of last year, 2025. So that is something which I wanted to put across for your audience, that while there are lots of narratives out there, at least our numbers from where we see it, a slowdown is not yet knocking the door. It still would take a little while. I'm not saying that it's all good, all well for the sector. I'm sure Vimalendra will also give his perspective as a developer. I'm not saying that everything is all right and the industry is in a great situation. Well, there are signs of concerns, clear signs of concerns, but right now, nothing to worry about. Same is the case with office also. While Bangalore as a city has seen a huge drop in absorption of office spaces, but that is because last 6 months, this period, it had done fabulously well. So obviously, when you talk about statistics, it's a base effect, because the last 6 months of the 2025 were too good, while this year about 14 to 15 odd million square feet of absorption is a great number. but comparatively, it's not looking so good. On the other side, Mumbai had a bumper half yearly, 7.5 odd million transaction outstanding, historic best. So overall, when the top eight cities in office market, when we are looking at, the numbers at about 48 odd million is just a little lower than what we saw in the first 6 yearly of 2025 at
Okay.
49. So barely a 2% degrowth. So net, I'm saying the cycle is somewhere, I would say, confusing signals coming around. But right now, at least data does not suggest any kind of slowdown hitting the real estate market yet. Over to you,
Okay.
Shashir.
Okay. Yeah. Vimlendra, your perspective on the residential side as a developer?
Cool. Yeah, yeah. So firstly, thanks, Shashi. Thanks for having me on this webinar. And a quick hi to all the people who are on this particular webinar. And Gulam, thanks. I totally echo your analysis. I There has been some chatter between last 6 to 12 months that there is this slowdown or a lower phase of reality that has started, given that we have seen a huge bump up from 2021 to almost 2025 post COVID. But but frankly, it's nothing but chatter. As you know, Gulam has already put the statistics out there, and I'll give you a perspective from the developer side. And let me share a few examples with both of you and the audience here. One is we recently did a launch in Bhandop, which is basically one of the largest launch in the central suburbs of Mumbai, and it was the best ever launch that particular micro market actually saw in last 5 to 6 years. So, and generally in the Mumbai market, the central suburbs are considered as slower than the western suburbs, if people who track Mumbai. And if what we have seen in the launch is any success, is any indicator of where the market is heading, I can very confidently tell all of you that the demand is pretty robust. Uh, I think though what we have seen is probably if people are taking a slightly longer time to actually complete the transaction. And I think it may be a knock on, again, it's more sentimental in nature and not necessarily related to financial conditions. It is because there's a psychological impact of this West Asia crisis. I mean, let's not miss it. Uh, because when you hear that news, there is this war which is happening. The petrol price, the diesel price, or the fuel price is going up significantly. The travel is impacted. When you hear the news about the large tech companies actually unfortunately laying off people, I think it does impact psychologically, right? But in India specifically, what we have seen is if there are layoffs which have happened because of those AI related initiatives and companies, there are equal and more opportunities which were created in the GCC sector. And who are the biggest beneficiaries in Bangalore? Bangalore as a city, Hyderabad as a city are the biggest beneficiaries of that. Why do I feel very confident about these two cities also? Because again, we did a launch in Whitefield, which is basically a bellwether IT hub of Bangalore, and a lot of GCCs are actually coming up there. We actually sold in a matter of 3 days more than 1,000 crores. Now, this is the IT belt. You're talking about the month of towards March end, where all this layoff news was coming in, the West Asia crashes was still going on. So fundamentally, what we have seen is we have not seen any of this slowdown actually on the ground. It is more of a chatter. Uh, as developers, what we fundamentally believe is the demand is very structural in nature. Will you get those cycles? Obviously, you will get those cycles. They are bound to happen because reality. But I guess what we are going to see is we're going to see a very stable phase or a growth phase for a longer period of time as opposed to a downward phase. So fundamentally, we remain very optimistic, very confident, and the numbers on the ground back that optimism.
Okay. So, Gulam, you are saying that data is not giving any kind of what we call say as a sign of the concern, and Vimlendra, you are saying that demand is very robust, and on the ground we are getting a different kind of voices. Like you use the word chatter, a lot of chatter about the negativity and everything. Gulam, do you see that any kind of impact because of the West Asia crisis? One on the cost of the project, and second on the price of the project.
I was waiting for this question to come up because, when you talk about real estate, everything typically comes to the price point, that what are you selling at, and that may be an indicator for the health or where a sector is at that point of time in the cycle. But that's not all. Price is not everything, because I'll give you a few examples. While I earlier in my submission I mentioned that Delhi market is clearly showing signs of slowdown with a double digit kind of a reduction in sales compared to last year same period, price rise in residential is highest in Delhi. Now, how do you justify that? So, while there are clear signs that the slowdown has come into Delhi, but the price rise is continuing unabashed. So, that is something which I wanted to draw the attention of you and your audience towards this fact that please don't look at price as the only indicator of the health of real estate. It is not. There are a lot of other reasons. Now, coming to the impact of West Asia, again, I wanted to bring a certain perspective in front of your audience. Uh, it's always, again, the content created that NRIs are buying in hordes in Indian real estate. I want to, demolish that myth. Please understand, if you look at only the last year, uh, I'm sure all of us know the devaluation of Indian currency, 10 odd percent. Now you look at longer term, on an average 7 to 8% is the reduction in the Indian currency over a period of time annually. Now, when you bring that in, who would be that fool who will bring money into India and see it degrowing? Is that an investment? Obviously not. So yes, NRIs do buy in India, but these are those who are either at the fag end of their stay as an NRI in whichever country they are in, or they need this house for some specific purpose, maybe say children's education, the kids want to come to India and study, or healthcare, senior citizens, parents, etc. If that not be the reason, there is no way an NRI would ever look at an investment per se, which will be degrowing for sure at the rate of 5-6% per year.
Yeah.
And on top of that, overlap with your property cycle. If you look at last 3-4 years, yes, the prices have shot up from X to almost X and 1.5 to 2X in many cases. But that has happened almost after a lull of almost 10, 12 odd years. And when you look at the long term growth, again, that growth is not even 5% or so. So, net, on one side, property cycle long term growth of 5.5%, and currency devaluation of the same or more, there is no sense of for anyone from abroad to come and park money in Indian real estate. If you are an NRI, I'm not talking about FDIs and
Yeah.
large platforms and funds, etc. As an individual, you really don't have a case to come to India and invest and bring your foreign currency to invest in Indian currency. Absolutely no case. But here we always have these stories floating around that NRIs are buying in bulk, etc. I have not seen any proof or evidence of that on ground. Yes, there are a certain size of buyer profile. Your share of the pie would be from NRI perspective, but not that huge. Now coming to the specific a disturbance that you are hinting at, yes, here is a possibility where a lot of them do see end of the road for them as far as Dubai is concerned, or one or two other countries in Middle East are concerned. They may look at it as an end of their career there. They may be coming back. But here again, the question is, tell me something. Suppose you have 5 crore of earning that you have made over last 20 years. Would you come out and buy a 4 crore apartment and have nothing to eat for next couple of years? Again, a very silly situation to find yourself in. So while NRIs and Middle East crisis may have an impact on cost, for sure, here comes a question: how has the cost gone up? And here again, when Vimalendra comes in and takes to the mic, I'm sure he'll give elaborate answer to that. But the impact of cost increase would be on price rise or a narrowing margin for a developer, which is what right now, since the price rise is a difficult proposition to offer, there is definitely an erosion of margins of profits from developers perspective. But beyond that, I don't see any other impact. As I said earlier in my earlier submission, if sales numbers are going as strong as they were for last so many quarters, That means that even after the cost rise, and that cost rise, let me also put it across, at least about 15, on an average, about 12 to 15% is the rise in the cost of construction. But in spite of that, at least transactions are not slowing down. That's the reason I set the backdrop to start with, that the price rise and real estate health are not the only two things talking to each other. There are much more to real estate than these two things, or the correlation thereof. Over to you,
Okay.
Shashi.
Yeah, thank you. Vimlendra, there is one basic question which I asked with the Gulam, that about the cost and the project. Delhi is something, is a very NCR market is something very unique one in terms of where we are seeing a very good price hike, but the demand is not something. Do you see the contradiction in that, and how do you explain that?
No, so what happened? I think we need to peel the onion here and look at not reality sector as a whole, but look at, say, an ultra luxury, look at premium segment, and look at affordable segment. Now, what has happened in NCR, and funnily, and I guess it's the developers and the consumers both are equally responsible. There is no premium and a mid-premium segment which is left in Gurgaon today.
Okay.
Everything is priced 8 crores, 10 crores beyond. So there is a huge segment which is looking for an apartment for 2 crores to 5 crores, but there is no supply for them. Even if you look at all the latest sales figures of different developers, they're all priced 9 crores, 10 crores, and people are uh, you know will not get into whether it's an actual end user buying or it's an investor buying for a short term with a lot of subvention. And so that's a different market. So NCR traditionally, unfortunately, has never been a very stable market.
Okay.
uh, a very large market in the scheme of things after MMR, right? But it's never been very stable. It's always been very speculative in nature. So there are a lot of payment schedules you will see. There is a lot of that I've sold. They have sold the project in 1 hour, which we all in real estate understand. It never really happens that way because there's a lot that goes in before you can actually sell a project completely out. Unless you are saying that the worst apartment has also been picked up at the same price by the consumer, and consumers are very well informed, right? So there are different models, and I guess it's more of marketing things to say that one day sell out. But leaving that aside, if you look at pure play as a market, I think the developers in NCR will actually start looking towards the premium segment as well, and mid-premium segment as well, because they need to address that particular gap if they need to bring stability to the market, because that segment is not speculative segment. At a high end, at a completely luxury end, you have a lot of disposable money also. If somebody who is buying a 10 crore apartment will have a net worth of 50 crores by and large, or 40 crores by and large. The
Okay.
other thing that you have seen in the NCR market is a lot of NRI money also coming in. The reason why a lot of the NRI money comes in the NCR market is because they do this 2080 payment schedules or 1090 payment schedules in a big way. So as an NRI, what does he think? He says, okay, I have to just give 10% today. I'll have to give 90% on possession, and then let's see and hope that as Gulam said, there will be a capital appreciation along the way, and that it justifies even for a currency depreciation. So net in his mind, he's calculating by the time of possession, I'll still be net positive. So there is a lot of that money also coming in. But contrary to NCR, if you see, Mumbai, Pune, Bangalore are very very stable markets. They have
Okay, now I
traditionally
was
they have
coming.
not really.
I will come
Yeah,
to the west part, but
yeah.
from NCR, I will go to the south because
Okay.
we have a lot of audience from the south. So, Gulam, can you just give me idea about? You talked about Bangalore, but there are other cities also like Chennai and Hyderabad, and of course now we are talking about Andhra Pradesh, new capital of Andhra Pradesh, which is also giving good traction. So, how do you see the south market, and then I will go to the west market, Gulam?
Uh, can I take a minute and support what Vimalendra was talking about? And why do I want to go there and spend a little while over there? Is for us to relate that even other markets are not too far away from what NCR has done. Typically, NCR takes the lead, the other cities follow. So that's why it is important to understand what has happened in NCR, as Vimalendra explained, is that a complete exodus from mid to lower end of the market. No developer, and that is no exception. I would hold even Vimalendra's group also culprit of that. There was a time when affordable housing was a flavor of the day. And I'll take you back about 4 years, like pre-COVID, when industry was going through a downturn. Pretty much every developer was catering to affordable housing segment. Maybe it was because the Pradhan Mantri giving a huge nara, ke housing for all, affordable, etc., etc. So 2015, 17 to 20, everybody was doing affordable housing, and so much so that overall transaction pie, if I would look at, more than two-thirds of that was affordable housing. When I say affordable housing, I'm talking about below 50 lakh houses. Believe me, more than two-thirds of the pie was in that segment. And there to today, things have changed so drastically. In last 3 to 4 years, every developer realized that the good times have come, and the good times have hit the upper end the best. So one, because of your larger, better profit margins, and two, also understand that selling one apartment of 100 crores is equal to selling 20 apartments of 50 lakhs. So your marketing setup, logistics, all those costs also are hugely pushing you towards the upper end of the market. And that was the reason why there was a clear flight. Every developer talk about, even Tatas were in that, Shapoorji, Palanji, big names who had actually set up a separate a business for affordable housing, have all shut shop and moved. The last of the company, and I say so with Vipulendra also here, was Mahindra, which actually said that even now they are focusing on mid to upper end of the housing. Now, here, just to give one more evidence of what I'm talking about, there was one company called Signature Global. About 8, 10 years back, they came in and they registered a public listed company. They always maintained that they're here to do affordable housing. 3, 4 years back, even they moved to upper end. So that was the last straw on the camel's back. And that's the reason why this situation, as Vimalendra spoke about, is very worrisome, because all your focus, another statistic I'll throw at the audience now, the numbers I was talking about, 175 odd thousand apartments sold in the first half yearly, more than 54% were 1 crore plus. And if I look at the next market, or if I focus only on 50 lakh and below, not even one-fourth of the segment of market now is in that price segment. What does it mean? That if you're talking about Mumbai, for example, in the whole city of Mumbai, there is not a single apartment below 1 crore. And if I look at the 5 multiplier for an EMI calculation, anybody who has 20 lakh salary or less has no house available in Mumbai, if you can imagine. I'm talking about the island city. And that's a reality. And that's a reality which is hitting Mumbai as well after Delhi. In fact, we always believe that Mumbai is very unaffordable market. But would you believe that of that segment of affordable housing, Mumbai has largest number of apartments that is below 50 lakh in any other city compared to Bangalore, Delhi, and blah blah. So that is something which is also yet another outlier. While Mumbai seems to be the most unaffordable, but it is giving you enough houses for that category. Maybe you have the distance from the center of the city would be a little larger, but then infrastructure improving, all those things are taken care of. And now coming to answer, I'm sorry I took a little while to explain the backdrop of
No,
the
no, no.
issue.
It's perfect. It's perfect.
So coming to Bangalore, as again what we spoke about earlier, because of growth of jobs creation, which is again, GCCs, as Vimalendra spoke about, global capability centers are adding huge number of new jobs in Bangalore. Overall, almost about 20 million out of the 48 million was actually picked up by GCCs. Another 11 million was picked up by flex offices, which would be more, the larger share would be coming to GCCs. So that's the impact of technology bringing into a city like Bangalore. So in my earlier submission, when I started, I mentioned that Bangalore is one city where residential sales are actually growing by leaps and bounds even now, which very clearly shows that Bangalore, and since we're talking south, let's now expand to other cities like Hyderabad, Chennai as well. In all those three cities, we do see no slowdown of any kind over there, very clearly because of the job creation. So while again problem of affordable housing missing in this whole picture is felt even in those cities, but the upper end focus on upper end is there. Everybody is talking about creating 5 crore apartments and plus. Even in Bangalore, luxury is the key everywhere, including Bangalore, Hyderabad. Even in Hyderabad, like for example, a couple of years back, we were doing for a very large global platform. We were looking at the award winners for the costliest apartment sale, the costliest apartment developers in the country, and we set the benchmark of 50 crore plus. Would you believe there were 29 developers in India which were catering to 50 plus category of apartment sizes? And of them, even Bangalore had 6 of them. Of course,
Oh,
Mumbai and Delhi had the largest chunk, but it actually shows you the evidence that affordable housing has been such an outlier. Every developer has now come onto that bandwagon and completely neglecting the mid to lower end of the housing. So Bangalore also follows, but compared to Delhi, it is still in a better situation because of the job creation, which is continuing unabashed for last so many quarters in the southern cities, which are all effectively driven by technology.
okay, Gulam, one more thing before I move to Vimlendra. What about Vijayawada, which is the new capital city of Andhra Pradesh? What kind of trend you are seeing in that particular city?
Well, Vijayawada, when you talk about, you also include Amaravati. Amaravati is
Yeah,
the new capital city.
I'm
Vijayawada
sorry.
is not.
Yeah,
So you are
yeah, I'm
creating
sorry.
a new
My
capital
sorry.
city at the outskirts of Vijayawada. And
Hmm.
right now, Amaravati does not have a existing a city vibe. You are still setting it up. So a few government offices have been set in Amravati, but most of them who are working there are traveling from Vijayawada to Amravati. So it's the a very typical case of Mumbai, Navi Mumbai, or Hyderabad, Shamsabad, or Bangalore, Whitefield type. So that's the situation where people are still traveling that long distance. But eventually, when Amravati as a city will take shape, you will see lots of movement of housing there. But that said, talking about Vijayawada itself, you know why the reason why we normally focus only on the top 8 cities of the country is because these are cities where typically your housing sales in a year would be 15-20,000 and plus. Rest of them all are below 10,000 apartments sold in a year. Vijayawada also, unfortunately, still is in that league where you're looking at 7 to 8,000 apartments sold in a year, and that's why it doesn't, make it to the top 8 league. It continues to be also rents, and which is where it is. Vijayawada continues to be amongst another 40 cities in the country, which are into that 5 to 10,000 apartments sold in a year kind of a category, and not much of a difference yet. I do expect that once Amravati comes in, and because these are twin cities, while Amravati will create its own economy and hence create the housing demand, but it will definitely have some impact, some impact on Vizag, where I believe that residential market may see a negative impact because of Amravati coming so close by, and a modern city, modern infrastructure, so on and so forth. Lot of modern things are coming up in Amravati, which most of the other cities would, envy Amravati for. But that will have the largest impact on Vijayawada's existing real estate. But time to another couple of quarters, we'll see that impact setting in. Over to you, Shishir.
Okay, yeah. Vimlendra, now going to eastern part of the country, East India. How do you see the situation there?
No, so I'll answer that question, Shishi. Just very interesting discussion that Gulam picked up, and just for the audience benefit on the affordable, because that's a topic which is generally discussed in the government quite a lot, given the focus that government has for obvious reasons. But Gulam, it's not just about the developers actually wanting to exit, barring a few. It is that the affordable housing, unfortunately, is no more affordable. In a sense, it's not financially viable for any developer. It's not that we decided to not develop any more affordable housing because of the lack of will or the lack of impact as a Mahindra group. But the financials just don't work out, because if you look at the land prices today, if you look at the cost of approvals, the way it has gone up, the cost of construction, the cost of labor, there are no margins to work. This segment can only work if actually government provides large chunk of land at affordable prices first. To begin with, that raw material has to be affordable. Till that time, every city will continue to struggle. Let it be Pune, Bangalore, wherever you have. So that's number one. Number two, I think barring NCR, and I'll not even say NCR. It's more of a Gurgaon phenomena, because in Noida and Ghaziabad you still have 2 crore apartments, 3 crore apartments. That is not a problem that we have, and you rightly captured in Mumbai. That's not a problem in Pune. That's not a problem in Bangalore, where you have enough and more choices available with people across the price segments that they want. So that's number two. Now, Shishi, to your query on the eastern part of the country, Kolkata for a long time was actually not even considered as a, while we were tracking it as one of the market, but it was not even considered as any market, worthwhile following or investing. But I would say that, and time will tell that with the change in the government, we have already started to see a lot of impetus. We have started to see a lot of the interest coming in the Kolkata market, and we have also had initial reach outs by the new Kolkata government saying that they want to create industrial parks, they want to create industrial cities, they want to create residential hubs. So, I mean, if this government follows through with the talk in terms of actions, then I think Kolkata will certainly start emerging as one of the important market, because it has always been a very promising market. Let me say, in terms of the cities in the eastern end. What are the cities? If you have Kolkata, what do most of the Kolkata people invest? They actually go to, if you see, to Bhubaneswar. For a lot of the medical infrastructure, they actually go to Bhubaneswar and Cuttack. So my sense is, if somebody is looking for an investment, this is not a bad time to start investing in Kolkata, with
Oh,
all the possibilities which are there and which will truly materialize in next 3 to 4 years.
okay. Gulam, your take on Eastern India?
Well, I'll continue with where Vimalendra has left. Calcutta market was decimated for beyond. Hello,
Yeah. Please go ahead.
hello. Can you hear me?
Yes,
Yeah,
yes.
I'm
Please
sorry.
go
There
ahead.
was a little okay, Wi-Fi down. So Calcutta market has been, going through a rough patch for a long time, and that reminds me a similar situation we had seen in Hyderabad about 13, 14 odd years back. And after the states were separated, we saw a absolute winning run by Hyderabad, which continues even today. So please understand, political stability is the key. Why real estate? For the whole economy to sustain and grow. And that's where we all of us have lots of hope in the changing scenarios. And we believe, and with somebody like Mahindra's, who are pioneers of putting up a private SEZ in the country. The first SEZ was set up by Mahindra's in Chennai, a private SEZ. So if I would be there as a decision maker for Kolkata, I would obviously invite Mahindra's to come and start that even in Kolkata or east of India. But that said, let's not forget that Calcutta continues. It was perhaps at some point of time, if you recall, was the capital city of the Akhand Bharat at some point of time, and has so much of history, the value, and even the ultra rich. A little while back I was talking about the 50 crore plus kind of price tag. There were three in Kolkata as well, and one of them made it to the top list of that platform I'm talking about. And while I was going through it, I realized that there is huge money in Calcutta. The typical Marwadi Bengalis, that's a segment which actually drives the business. And if you recall, many of the top, what would I say, the business houses of the country were actually in Kolkata.
Yeah.
When I started my career, I recall even one of the top four big consulting firms had that headquarter in Kolkata, even when I started my career. So Calcutta has that history, the legacy. You just need the right policy framework for it to bounce back. And we believe the time has come, and we want to believe that in next couple of quarters, we do see lots of action on ground. But at the moment, and that's what I'm talking about, last couple of quarters, for residential were as it is good. I'm looking at last 5, 6 years, even before change of the government, residential sector had started doing well. But it is still not the best of the top 8 cities. Volume wise, it was still in that range only, where 10,000 or sorry, about 18 to 20,000 kind of apartments sold in a year, half yearly about 8 to 10,000. Still, it is not that bad. But with this change in perspective coming in, we are expecting a lot to change. And if it is only east we're talking about, then obviously we are looking at Odisha, Bhubaneswar, Guwahati, etc. Those cities have also started doing well. In fact, we say that if you go to Bhubaneswar, in last 10 years, it has done so much of growth. In fact, I want to make this statement. I believe that best of the roads and the public infrastructure in the country you will find in Bhubaneswar.
Yeah.
And all that has happened in last 10 years. So growth wise, a lot of new things are happening in both these cities, Bhubaneswar as well as Guwahati. And we would love to see those cities growing. We always believe that the top 8 cities are not good enough for a large country like India. We need at least 25, 30 such cities to talk about for growth perspective. And perhaps we are taking steps in that direction, albeit baby steps, but steps in the right direction. Over to you, Shishir.
Okay. Vimlendra, one important issue which I want to bring here is about the religious cities. Like we have seen the kind of growth in Ayodhya, the kind of growth in Varanasi, the kind of growth in various other religious cities. How do you see that real estate in these real religious centers?
So, a very interesting question, Shishir. For the first time, I've been asked this question. And see, without getting into the merits, you know, why should people buy? It's a matter of faith at the end of the day, and a lot of the people are looking to invest because this is going to be these cities. Say, let it be Vrindavan, Mathura, let it be Ayodhya. They are going to be driven a lot by the tourism. And it is not that the high rises are coming in these cities, because they have enough and more land. It is all essentially the plotted, which is being sold, plotted, and people hope to construct their own houses. So in my mind today, it's purely driven by opportunity. People believe that the pilgrimage or the faith-related tourism that is going to be growing by leaps and bounds in these cities. Given that there is obviously so much of focus, there is a legacy, there is a history. We all have our faith rooted in these cities, and that is the bet that people have taken, saying that it's better to invest in the plotted. The value will only grow over a period of time. I'm not too sure that it is actually for self-consumption. So a lot of the purchase which is happening is purely driven by opportunism and hoping for the capital value enhancement that's going to happen. It can only sustain itself in future. So this is all initial euphoria, Shishir. I believe in that. It can only sustain if this is actually supported strongly by the creation of industries in these cities, creation of jobs in these cities. Otherwise, it will fizzle out over a period of time.
Okay. Gulam, your take on that?
Well, I would support Vimalendra's stand on the future prospects, but talking about what's happening today, most of these cities are experiencing a huge euphoria, be it starting from Banaras to Ayodhya to, you name it. Even cities like, say, Ujjain, Bhopal, Indore, and so on. I am actually connected with a certain company already in the making, where they are putting up some 50 to 70 hospitality projects across many of these religious places, which could be, if you talk about all Jyotirlings, if you talk about Shakti Peeths, if you talk about Char Dham, etc. Believe me, you will see more than 70, 75 cities in the country coming suddenly in the picture. And that is what is happening. There is a certain platform already in the making where entire, you decide which of these Shakti Peeths or Jyotirlings you want to see, and somebody will, set the whole plan for you. And that again, 3 to 5,000 rupees kind of per room night kind of a number, which is absolutely affordable for us Indians, is in the making. However, as we spoke about, it is still on hospitality, because it's ultimately tourism. And you look at this from a very global perspective, wherever you have large religious related drivers for economy, it remains absolutely, driven by tourism kind of a thing. Talk about the largest of, talk about Mecca, Medina, or Vatican, etc. Nobody goes there to settle down for good, and hence you're not buying an apartment because you want to live there for good. So you would still be buying your own share in the hospitality. Like there are lots of these models where you buy to rent kind of a thing, and a lot of those things are there. You are going to use that place, which is your own. You have bought it. You will be staying there 10 days in a year, but then you bring it back into a large platform where somebody else is managing it and giving it to people as a hospitality venture. So all those things will be happening, and already we do see happening here. So you have investment opportunities for individuals also, people like you and I, can also buy into those opportunities. But otherwise, it's only land, and land is risky. As Vimalendra spoke about, land is one asset class which can go haywire if proper economic drivers are not brought into perspective. So yes,
Okay.
there's a huge euphoria in religious tourism. Lot of things happening, lots of very interesting things happening. But from investment perspective, you will have to wait and watch. Otherwise, you're taking a big punt. It's a gamble.
Okay. Wimlin, now coming to the last segment of our discussion, where we will take up now questions. All the questions have come, and we will take the question. But before that, I have just one question about this CAGR. I mean, they say that the real estate sector CAGR is more than 10% or 12% during last 5 or 6 years. What is your take on that, and what could be the next 4 or 5 years kind of situation which you visualize?
So at an overall sector level, you are right. It could be, anywhere between 10 to 15%. But again, here I would like to differentiate between, say, the branded corporate developers versus the non-branded corporate developers. You are seeing this consolidation happening in the industry in a very, very fast way. Pre-RERA, there were something, thousands and thousands of developers. That number has reduced significantly. Today, a brand is very, very important. Consumers are very aware. It is not easy to raise capital. I mean, the banks are also very, very cautious whom they are lending. The private equity is also very careful, right? You need to have a brand which is trustworthy. There is governance standard which are very clearly there. And the cost of funds, right? For a group like Mahindra, the cost of funds is very less compared to many other developers, and that gives us that extra edge, right? So it depends upon, if you look at the market in these two categories. For branded developers, I think the growth has been significant. I would say, we have seen a CAGR of upwards of 25%. At Mahindra, we have seen a CAGR of 35% actually over last 6 years. And I would say for a lot of the other branded competition, they would have anyway grown between 20 to 30%. And the numbers are there in the public domain. These are listed entities, right? Now, in terms of next 4 to 5 years, I actually remain very, very optimistic. And we as a company have significantly invested in generating more and more gross development value, which is what we call GDV. I think today we have, as Mahindra Group or Mahindra Life Spaces, we have roughly 47,000 crores worth of GDV which we need to launch. And we have narrowed our focus only to three cities. We will say we will only operate in MMR, Pune, and Bangalore, because we believe that there is so much depth, so much opportunity in these three cities itself. And of course, we have Chennai and Jaipur where we have historical bets because we have integrated cities there. So we remain very optimistic, and we believe that the market will continue to grow on a conservative basis, also around 8 to 10% going on. And if it gets a positive kicker in terms of, say, there are no geopolitical tensions, if there is a stability in the fuel prices, I think this number can further go up. Because let's not forget, if you look at some statistics, in China or in developed economies, the real estate or reality and infrastructure contributes to almost 16 to 18% of the GDP. In India, we are still in single digit. I mean, if we have a scope to grow at least 80 to 90% from where we are, in terms of, if India truly has to become a Viksit Bharat by 2047, the one sector that will really, really have to continue to play along is going to be reality and infra. Otherwise, that's not going to happen, right? We hope, and from what I hear, because I've been part of the, say, Naredco and other industry associations, is that we are also pushing that why don't you recognize real estate as an industry? Because it has an impact on the lending norms for the banks. And if more capital and the right capital is available to the right set of players, I think this industry will continue to grow well in a very robust way. And we have seen a lot of change structurally overlap since RERA has been formed. I think
Okay.
today the consumers are very, very aware. They know what their rights are. You just can't take the consumers for a ride or take them for granted. You need to deliver a super notch product. You need to deliver it on time. I mean, it is a non-compromise. And we see that happening, and we will see that consolidation playing up in next 5 years in a significant way. You will only have those X number of players who will continue to grow in a significant way, and others will probably either merge or they'll fold up.
Okay. Now I will take the question, and this question is from Bhaskaran RV, and I'm sorry, I think that question has just I will request my coordinator to put it again. Now I will take the question from the Sindhu. With income strain and layoff, why are the prices of real estate in India not cooling off yet, Gulam? I think we discussed something about that, but still this question has come. So please.
Yeah, so I'll try to answer this in a few sentences since it's something which you already spoke about. The impact of job losses, etc., will be felt in future when typically it's on an average about 3 to 4 quarters of a process for anybody to think about buying a house, to actually sign the dotted line, make the payment, and pick up the apartment. So even if you look at the Western Middle Eastern crisis or a lot of other challenges because of job losses coming up, the impact thereof will be felt in another couple of quarters, not immediately. So there is a clear lag. And number two, well, whatever said and done, the current upswing that we have seen has happened after almost about 7 to 8 years of a downturn. In that downturn period, which was 2000, I would say 16, 17 to 2000 to about 2020, which is up to COVID, the stock exchanges were doing fabulously well. There were so many job creations. There was enough of money made, wealth made, and so on. And that all that money was actually held up somewhere, which was actually growing at double-digit growth rate, and that was a period when housing market was not growing. So today huge number of buyers are those who made great money in that period, and they have the wealth already created and they are investing. So as I said, the lag effect I spoke about exists in various ways. It's also about when do you want to buy an apartment, how long would you want to continue to live on a rented apartment, the decision to go out and buy. A lot of these things are playing out, and hence the impact of all these things straight away on prices will not be felt. Earlier I tried to break prices from the health of industry. The two things are pretty separate, not entirely dependent on each other completely. This is yet another factor that your audience is asking about. So multiple factors. Let's not confuse or pick out one factor and try to connect it to the health of real estate. It will not be good enough.
Okay. Now the question is from Bhaskaran RB. Honorable speakers can cover the strategies required to bring down the gap between demand and supply in the housing needs of the low income group so as to fulfill the nation's mission. I think we were discussing about the affordable housing, and that is one thing which is related. This question seems to be related with that only. Vimlendra, your response to that.
No, so coming straight to the point, I think if you want to create more affordable housing, government needs to become a significant player. We are not saying that government needs to become a developer, but there is a lot of land in the city which is available with the government, both the state governments and the central governments. Can they free it up in a subsidized way, and they say that, hey, I will allocate these large chunks to say 5 6 large players and give them a mandate to develop. So that is one thing. If they do that, that will be a significant boost to affordable housing. Number two is the financing options, right? And frankly, all said, all done, while the credit growth is growing in the country, we read in the newspapers every day. But actually, if you go as somebody who doesn't have a great credit score, and in the low income segment, typically the credit scores are always a challenge because they have multiple products. They'll have a personal loan, they'll have a credit card, they would have defaulted here and there. It becomes a challenge. So at their credit score, the borrowing cost actually goes up. So can this particular segment be looked at in a different way by both RBI and the banks? So if you can actually do these two things, probably the affordable housing can pick up. Today, what is happening? The notion of affordable housing is that it has to be 3 hours away from the city. Now all the job is in the city. How can you stay 3 hours from the city? Who can commute 6 hours a day? So that is the reason why it is not working out. And if you look at just Mumbai as an example, it may still work out in say Pune or in Bangalore, which are circular cities. In Mumbai, it's a linear city, so you have to travel from one end to the other end. It becomes challenging. So if government can actually play its role in these two things, I'm very confident that there is so much of demand for affordable housing. And frankly, so many people who are looking at owning their first home, that dream can be brought to reality.
Vimlendra, next question is, I think you will be the right person to talk about this. Will developers be passing on cost to customers? Now every building material is getting costly.
No, so we are also very measured. It is not that if there is a 5% increase in the construction cost, then entire 5% cost goes up. So one has to remember there is no straight correlation because there are various things called as optimization of the cost. There is an efficiency improvement. We constantly look at the designs, how you can there is newer construction technologies which are coming. So parallelly, if there is an input cost going up for materials, the technology which is available for construction helps to rationalize that to some extent. So it's actually a continuous exercise right from the time you actually dig the foundation or do the drawings till you complete the building and handover. So it's not a straight correlation that if there's a cost increase, the price of the property goes up.
Okay.
We are very conscious of the fact that any house that we build needs to be affordable and cannot be out of the reach of the vast majority. Otherwise, the segment or the entire sector will suffer.
Okay. Gulam, this question is for you. What about growth prospects in KCR Mumbai 3.0 region?
Uh, Allow me to spend a minute or two on the affordable housing question also, and it could be slightly contradictory kind of a position from where Vimalendra left it. But it is important because that's much larger a perspective than looking at Mumbai 3.0 alone. I'll come to that also. But affordable housing, and this is something which we found very disturbing, is not just about value of land. It's more than that. It's actually the whole exodus of developers that we spoke about is something which is worrisome. And that is, I agree that you're here for commerce. You're here as developer to give better returns to your stakeholders, to your shareholders, etc. However, the other side of it, that it's very ironical to know, if I'll take you all and your audience to the statistics a little. Pradhan Mantri Awas Yojana, when it was launched, under that they created 97 lakh houses in PME. Then they revised the whole to adjust to the new requirements, etc., because there were lots of hue and cry that you need to increase the definition of affordable housing has to be larger, because in cities like Mumbai, a 45 lakh doesn't get you anything, so take it to 75 lakh and so on. So amongst all that discussion, government did all that, and Pradhan Mantri Awas Yojana 2.0 came into being. Now that is also here for almost about a year and a half, but ironically, in last year and a half, no new developer has come on board to be a part of the PME 2.0. In fact, as I said earlier, most of them have actually run away from affordable housing. And here is the challenge. We are talking about Pradhan Mantri Awas Yojana 2.0. Here, they have actually jacked up the limits for affordable housing in the urban areas. They have defined PME Pradhan Mantri Awas Yojana 2.0 urban. PME urban is a separate, concept altogether. Here, the problem is in PME 2.0, you require almost about 2 crore houses to be created, of which government does not have wherewithal to do half of that. Remaining has to be done by private agencies, and unfortunately, there are no hands on the deck. So, in a situation where you need all developers to also come in one form or the other, I understand you need to make profits, etc. That's the key for your existence. But on the other side, if all your resources are so much against the requirement of affordable housing, it's a worrisome situation. That's, of course, a different debate we can get into. Now, KCR belt, Mumbai 3.0 is going to be a long way. It is just about on the drawing boards. It's going to take a long, and as Vimalendra was talking about, infrastructure piece also has to come into being, because almost about 70 years after you started Navi Mumbai, you created Atal Setu. You brought South Mumbai close to the rest of Navi Mumbai after so many decades. So you will have to do a lot more to connect Mumbai 1 with Mumbai 3. Forget about Mumbai 3 with Mumbai 2. So it's a long distance. I would caution people to take investment strategies for Mumbai 3.0. That's going to be a huge punt. Very rare chances of you succeeding in your punt. But right now, very dangerous situation. You have to wait till a clear master plan emerges or a clear way forward comes. Right now, it is only in media. If at all it exists, it's on the drawing board of master planners. So let's be cautious.
Okay. Pimlind, this question is for you from Abhishek Singh. I'm struggling to decide between single big carpet or multiple small carpets like studio homes. Could you please throw some light on the future of the studio homes buy rent in upcoming metro cities?
Yeah, no, definitely a very good question. And just one more point, I think, just so that the audience don't feel just a contra view slightly. I stay in Navi Mumbai, and Navi Mumbai is a last 25-year story, 25-year old story, and people who took an early punt. And this is, I would tell, for all the people, right? If you are looking for investment, or if you really don't have the top dollars or top money, but you are a mid-income guy, you have no other option but to look at, say, the extended suburbs. You'll have to look at Thane extension. You'll have to look at Navi Mumbai extended or Mumbai 3.0 as and when it gets developed. From what I know, and Gulam, you may be privy, there is a lot of action on the back end which is happening on Mumbai 3.0, because frankly that is the only area which is available for Mumbai metropolitan region to grow, which is closer to the Navi Mumbai International Airport, closer to the Mumbai city, closer to Navi Mumbai. Otherwise, you'll have to go all the way to Palghar, which is not feasible from a infra perspective. So, slightly different view. I'd say that if somebody is looking for an investment, or somebody is looking for a long-term punt, it's actually not a bad option to look at Mumbai 3.0.
Okay.
Right? So having said that, on this particular question, it depends upon whether you are an investor or you are an end user. So it's not a straight answer. And frankly, if you see the pattern, what is happening, those studio apartments and 1 BHK apartments are actually going away. A lot of the concept of studio in Mumbai does not exist. Because again, what is happening is, and this is, you can blame it on the pandemic. After pandemic, the unit sizes, the average size of the units have started to go up significantly. Even today, from what we see on the ground, the demand for larger configurations is actually higher. Let it be a larger 2 BHK or a larger 3 BHK or a larger 4 BHK. And again, let me share some example. All the way in Kandivali and Borivali, which is western suburbs in Mumbai, while I know it's a pan-India audience, it's far away actually from the South Bombay, which is considered as a core city. People are actually looking and buying more and more of 4 BHK apartments. And
Okay.
I think that phenomena is, I'm seeing it across the cities, and Gulam can confirm that, and that is still playing out. But if you're looking at pure play from an investment perspective, I don't know if there are no studio apartments, but there are 1 BHK whatever are available. If you're looking for a rental income, it's easy to rent 1 BHK and 2 BHKs. That'll help you, give you a higher yield. But if you're looking as an end user, it's better to take a punt on a larger flat, because liquidating that whenever you want may not be that easy. It's easier said than done, but then it's difficult to sell. You have to find a right buyer at a right price in the market at that point of time.
Gulam, this question is for you. Do you think India can ever have residential REITs? People living on rent in apartments managed by such REITs. Is this a pipe dreams or is there a plausible future for it?
Pipe dream. Let's look at it from the perspective of what's happening. Your rental returns for residential are around 2 to 2.5%. Very rarely it touches 3. In that case, it doesn't make any sense to take this concept into REIT, and there's a reason why REITs are keeping out of it. We all know, if one of us would own a second house and we would have given it on rent, we know that after paying taxes, and that's where tax theory comes in. When you're giving it on rent, you don't want to pay taxes to make at least a little money to maintain that apartment. The moment you start paying taxes, etc., you are above board. Then you are barely left with any money after you pay maintenance and all those costs. So residential real estate does not make a case for REITs right now. However, the small REITs have come in, MSME REITs have come in, which are investing in residential real estate, but they are again not doing for a simple plain vanilla residential. They're getting into purpose built housing, which could be, say, for example, student housing, which could be for vacation or holiday homes, etc., or for even industrial housing, etc. So to start with, the MSME REITs are coming in residential only on those specific sectors. So it's a long way. I would say it's a baby step in that direction. But if you want to see real estate, like you and I actually living in an apartment which is managed by REIT, it looks like a pipe dream right now. That's where I started.
Okay. Uh, This question is from Mr. Dr. Praveen Kumar. How do you assess the elasticity of real estate demand in India with respect to interest rate cycles and income growth? Bimlendra, please.
So, Dr. Praveen, I think we have all seen the interest rate cycles fluctuate quite a lot over the last 20 years. There was a time when the mortgages were at 11%, 12% also. There was a time. But currently, if you look at it, I think the home loan rates are actually at a lower end. And they're very, very comfortable. They're roughly, if you have a decent credit score, you can get a home loan at 8.75%. Uh, and it will take some time before the interest rates really move up significantly. And so that's one thing. I think the interest rates are not a challenge. You have a long runway before they actually go out of hand. It depends on a multiple macroeconomic parameters. So today, I think that's not a challenge. On the income growth, I think what we have seen again last 15 years data, if you say the Government of India data, the per capita income has moved up significantly. But in real estate, it's not important to look at per capita income. It's important to look at the household income, because increasingly what is happening is it's basically two people in a household who are working, or three people in a household who are working, husband wife working, or father son working, and they cumulatively look to purchase a particular property. So from that perspective, affordability to purchase a home has definitely gone up, and the view is that it will continue to move up as the education levels and opportunities get created more and more, in at least in the top 8 cities. So I think we are in a good space. It will continue to grow.
That's the last question now. That's from Bhaskaran RB. Gulam, it is for you. Where do we stand in respect of employing robotics in construction industry to speed up the construction both in number and retaining the quality, of course, without inspecting the manual laborers much? Gulam?
Uh, we are talking technology. We are talking the future of technology coming into real estate. Um, let's look at it this way. Right now, we are at that stage where we are bringing in soft technology in construction sector. These are things like apps. Say for marketing and sales, you will have good apps coming in. You will have lots of overall site management apps coming in, technologies coming in to help you, even with drones, etc., doing observations and etc. during the course of construction and so on. Lots of those softer, I would call them softer technologies, because what the question talks about straight away to robotics, where you will bring in robots to replace the human labor. That's a long way to go. First of all, even in the global perspective, we don't see much of a robotics coming in. Of course, in large infrastructure projects, you do have lots of robotics coming in, but typical real estate, and mind you, real estate is a project which is not a cookie cutter kinds, where you have a templatized version, where you have a same template repeated in multiple times thereon. There are pod site kind of concept that are coming in isolation, where a certain portion which is repetitive, say toilets in a particular shaft, would be put up in pods, etc. So technology is moving a lot, is going ahead a lot. But coming straight away to robotics, I would say it's a long way to go. And after all, with manual labor so affordable in this country, I don't see it's getting replaced so fast in times to come, because you are going to pay a huge amount of money even for changing it to robotics. Right now, when you're struggling with the energy costs, when you're talking about cost already going up, in a situation like that, robotics is not the subject for me to discuss. I would rather focus on creating more value engineering, rather bringing in high-end technology to replace human beings here.
Yeah, that is what I wanted to say, that technology not important at this moment. Technique is important, how to use that technique and to bring down the cost of the project so that the people are going to have at a price which they can afford. So with this, Gulam and Vimlendra, thank you very much for joining. Unfortunately, Prashant has to leave because of the technology itself. He could not is able to connect because of
And
the technology.
ironically, he left me the only suited person on the set. The others were not. You didn't give me a chance to get out of it. So I hope your audience doesn't mind one person who's looking out in this scenario.
But Gulam, your suit also added value to the entire discussion. That is the most important thing.
The problem is wearing a suit and discussing affordable housing doesn't go hand in hand.
No, we also talked about the mid. You also talked about the 50 crore plus houses and all
Thank you.
those things, and you talked about how the more and more developers are moving into that. So, on that note, thank you very much, Vimlendra, and thank you very much, Gulam, for
Thank you.
participating in this webinar, and thank you all our audiences who have participated in this discussion, sent their question, and stayed there for almost more than an hour now. It's now 1 hour and 5 minutes. So with this, we close this webinar. Thank you very much.
Thank you very much, Shishir. Thanks,
Thank you.
Gulam, and thanks everyone.
Thank you.
Bye.